Hey, Cashflow Ninjas, real quick before we jump into today's episode, I've been asked by many people recently, what has been the one thing that has made all the difference on my journey as a business owner and investor? I started businesses and I've invested in businesses. I've invested in single family real estate, multifamily real estate. I still have a sizable portfolio of multifamily real estate, historic resorts, mobile home parks, oil and gas, life settlements, gold and silver, Bitcoin and cryptocurrencies. I could go on. But the one thing that has changed the financial trajectory for myself and my family has been infinite banking. Yes, you heard that correctly. That is the number one thing I've done over the past 2 decades that have made the single biggest difference. And it's not even close. Setting up and building out a family banking system using infinite banking has enabled me to create my own financial system. This year, it has allowed me to focus and not pay attention to all the chaos in the global economy and global financial markets. I really don't pay attention to all the noise about tariffs, trade wars, markets violently going down and then going back up, or interest rates skyrocketing and wrecking real estate deals and other alternative investment deals. Do not be beholden to other systems. Create your own system. If you're interested in working with me and my team at Producers Wealth to set up your own banking system or your own business and family banking system, then go to getwealthyforsure.com. That's getwealthyforsure.com. When you go to getwealthyforsure.com, you can request a free copy of my best-selling book, Get Wealthy for Sure. Only pay for shipping. You can also watch all of our presentations and schedule a call to explore infinite banking options with me and my team. You don't have to be powerless amidst the chaos. You too can have a financial strategy that provides certainty, predictability, and clarity. You and your family can also get wealthy for sure. Go to getwealthyforsure.com to start your journey today. The world is going through changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Laubscher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher. Thank you so much for joining me for another episode and spending your most valuable resource, your time, once again with me. Everything Cashflow Ninja is at cashflowninja.com. There's over 1,000 podcast episodes, 4 books. We've got reports, webinars, and much more, all at cashflowninja.com. And don't forget to subscribe to the best newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Matthew Bowles of the Maverick Investor Group. We're going to be talking turnkey real estate, and more specifically, single family turnkey real estate. We're going to get an update from Matt to see what's going on in that world and what investors need to know about. Matt, great to see you.
MC, so good to be here.
Yeah, I've been looking forward to our conversation. A very interesting story and background you have too, and you're involved with a whole bunch of exciting stuff. For my listeners and my viewers that's not familiar with you and what you do, could you please share a little bit about your background and journey with them?
Sure, absolutely. I co-founded Maverick Investor Group with two business partners back in 2007, and that is a real estate brokerage that has a very specific niche specialty. Since 2007, we've been doing one thing and one thing only, which is helping people to buy turnkey rental properties in out-of-state markets, because we wanted from the very beginning to develop a business model that would enable people to own rental property in the best, most advantageous U.S. real estate markets, regardless of where they happen to live. Those markets, of course, change over time. So we wanted to empower our clients to be able to buy in the best real estate markets and to build and diversify the real estate portfolio over time. So we've been doing that since 2007.
What a start that was, huh? 2007, then you hit into 2008, 2009. And then, of course, the best time to buy real estate, 2010, 2011, 2012. It was quite an interesting start you guys had. What were some of your experiences that you can share around that? And how did you guys navigate that chaos?
Yeah, it was really interesting. We've been doing this now through all of these different real estate property cycles, and all different types of things have come up. And one of the things that I have learned throughout all of those cycles is that it's always a good time to buy real estate as long as you buy right. And there are different types of buyer psychology for different segments of real estate investors that are more enthusiastic about buying at certain points of the market cycle than in others, right? So in 2007, when everything was going up, there was a whole bunch of people that were really excited to get in the game and buy real estate and all that kind of stuff. And then in 08, 09, when the market went down, a bunch of people, there was a certain segment that said, I don't want to buy real estate right now. It's all just gone down. And then there was a whole other segment that said, hey, there's a fire sale on real estate. Buy as much as you can. And so I think the reality is that it's always, at any point in the real estate market cycle, there's always going to be pros and there's always going to be cons, and those are going to fluctuate at any moment in the cycle. You can say, this is great about the cycle today, or this is less favorable today than it was a few years ago, but this part is better than it was a few years ago. And you can say that at any stage. And so the key is to just make sure that you're buying right at the moment that you're ready to buy in that particular property cycle, and to take advantage of the pros and the advantages of that particular historical moment when you're ready to buy.
Buying right and then financing it right and managing it right? Right?
Exactly right. And that's the thing, because residential investment property as an asset class, if you buy and hold, is an incredibly unique asset class, because normally if you're buying stocks or you're buying cryptocurrency or buying something like that, usually there's only one profit center, which means that you hope and pray it goes up in value, right? And if it does, you sell, then you pay a capital gains tax, and then you hope that whatever's left over beats the rate of inflation. But when you buy and hold, not flip, but hold residential investment property, all of a sudden it activates 5 simultaneous profit centers that work for you at the same time. So you've got your cash flow. If you bought right, your tenant's rent should cover all of your expenses and then still produce a positive cash flow coming into your bank account every month. Also, your tenant's rent is covering your mortgage. So if you got a fixed rate principal and interest mortgage, your tenant is paying down your mortgage. So in 30 years, your tenant will have paid off your entire mortgage, and you built equity all that way without any market appreciation at all. Then, if the market goes up in value, now you're building equity through market appreciation. You've also got the activation of tax benefits, because the government wants to incentivize you to provide housing for your fellow citizens so that they don't have to do it. And if you're willing to do it, they're willing to incentivize you through tax benefits, allowing you to depreciate the structural value of your property, even if it's going up in value, and so forth. So you got that working for you. And then probably the least understood benefit of buying and holding residential investment property is that you can profit from inflation. And that's particularly important when inflation is higher than normal, right? Because normally inflation is very insidious. It just eats away at your wealth. It destroys your buying power. If you've got your money sitting in a bank, you're just losing buying power. But if you take that money out of the bank and you put it in a residential investment property, you've just moved yourself to the other side of the inflation equation, because rents go up with inflation, home prices go up with inflation. And if you borrowed a 30-year fixed rate mortgage, you borrowed it in today's real dollars and you're paying it back in future diminished nominal dollars that are worth less than the ones that you borrowed. So instead of eating away at your buying power, now inflation is debasing your debt and it's actually working for you, right? And so if you're talking about buying and holding for the long term, then you don't need to be super concerned with short term, what's going on in the short term, because you can buy a good property. And if it's making your money when you buy is the key, if it's cash flowing when you buy and it's in a good area, then you can just hold it and let those 5 profit centers work for you over time.
What markets are you guys currently into, and what are you seeing currently in the residential, the single family, quote unquote, turnkey rental real estate market?
Yeah, so it's a very interesting historical moment in the property cycle, like we started to talk about, and there's a lot of really important advantages to buying in this historical moment. So for example, people are probably aware that interest rates are higher now than they were 4 years ago. But what's important to understand about that is the benefits to real estate investors of this current dynamic. One of the things that's happening with that is that people that locked in super low interest rates on 30-year mortgages 4 or 5 years ago, those people realize that if they sell their house, they're going to have to buy another house. They're going to get a higher mortgage rate. They lose that low fixed rate mortgage. So they're incentivized to not sell their house. So that is keeping properties off the market, and it is creating a supply deficit, right? Right now, the current active listings in the U.S. real estate market is about 25% below what would be considered a balanced market. There is a supply deficit. So what is happening with that? It's been pushing home prices up. Look what's going on the last 5 years, right? Most of the markets we're dealing with have had over 50% home price appreciation in the last 5 years. So if you always want to be, as an investor, you want to be on the supply side of a high demand equation, right? The other thing that's happening with those interest rates is that people that would have been able to afford to buy their first time home 4 or 5 years ago maybe can't afford that anymore because the mortgage payment's too high. They get pushed into the rental market. So what does that do? That creates more rental demand, pushes upward pressure on rents. So it increases rents. It also lowers vacancy because there's more rental demand, all of which benefits real estate investors. So we've seen some of the lowest vacancy rates over the last 5 years that we've seen in 40 years. And rents have been going up at incredible rates also, right? So all of these things benefit real estate investors. So I say that to start out with, and then I'll answer your question about markets. But I say that to start out with because it's always important to see the full picture. So some people might say, mortgage rates are higher now than they were. Yeah. Guess what else is higher now? Rents, which is what's going to cover your mortgage, right? So you always got to look at the whole picture of the deal. And that's why I say at any point of the market cycle, you can always buy right as long as you select the right property in the right area. So let's talk about that. Which markets are we dealing with today? Now, I told you we've been in the game since 2007, and I can tell you that the markets we were in back then are not the same ones that we're in now. So, for example, right after the 2008-2009 crash, we were in markets like Phoenix, Arizona, where they just built all these new construction properties and you could buy, nearly new properties for below builder replacement cost and still rent them for a great amount and all that. But then what happened? All those home prices went way up and the rents did not keep pace with the home price increases. So you had this process of yield compression where the cap rates were no longer as advantageous for real estate investors. So then we moved over to Atlanta and Houston and Dallas and all of these markets, which back 10 years ago were really amazing places to be in. Now, a lot of those prices have gone up so much and the rents haven't kept pace. So you have this compression of yield and this lowering of cap rates. So today, as we're doing this interview, some of our most popular markets are in the Midwest. So markets like Kansas City, St. Louis, Indianapolis, Cleveland. These markets have some of the most advantageous rent to value ratios, right? How much can you buy the property for versus how much can you rent it? Then overlay that with your expenses, So these markets have lower property taxes than a market like Texas, right? Or New Jersey, or some of these really high property tax states. So now you have lower expenses. So then your net cash flow, right? Your operating expenses are lower, your cash flow is higher, your cap rates are higher. And a lot of these markets are really, solid economic markets as well in terms of job growth, lower than average unemployment, people moving in because the cost of living is lower. As we're seeing all of these prices going up for inflation and the cost of living is going high and all this kind of stuff, a lot of people are interested in moving to places that have a lower cost of living, but still a good quality of life where jobs are being created. And that's really what we talk about when we're talking about investor advantaged markets.
So it's interesting to see how all of this is playing out. The Midwest is a good place right now. You've got teams in these markets that identify properties, buy them correctly, fix them up, rehab them, and eventually market them, find and approve tenants for them and put them in, and then manage the properties, correct?
Yeah, so we have relationships with companies that are on the ground in these specific markets, and that's what they specialize in. So we always like to work with local niche market specialists in each area. These are not, folks that have just, come in and are working in 12 different markets and, have all this stuff. These are people that are from those areas, based in those areas, working in those areas, and they specialize in serving real estate investors. That's very important, right? Because you can call up any real estate agent and be like, hey, can you help me find an investment property? Pretty much all of them will say yes. Just like you can call up any lender and say, hey, can you do a loan for me on an investment property? Everybody will say yes, they can do anything, right? What you want to do is you want to work with niche specialists, right? You want to work with a mortgage lender where the majority of their mortgage business is serving real estate investors. You want to work with, when you're buying rental properties, you want to buy them from a company that is what they specialize in. They understand where in that market to buy. So we're talking about these big cities. These are huge metropolitan areas, right? And in any city in the country, the reality is that the majority of real estate is not going to be a good investment. And the reason is because it's either going to be too expensive, too high-end, luxury type properties, and it's not going to rent for enough money, it's not going to cash flow, it's not going to make sense. Or it's going to be too low-end, and it's not going to be in a desirable area. It's not going to attract quality, long-term tenants that are going to pay consistently every month, treat the property great. It's not going to give you a great exit strategy to sell to an owner-occupant that wants to live in that area, right? So you want to buy in what we call the real estate investor sweet spots of these markets that are going to be delivering you good, solid cash flow from day one, attract quality, long-term tenants, and also be in a neighborhood that's not only desirable to tenants, but desirable to owner-occupants as well. So to have that mix of renters and owner-occupants in that area. So you're building in your exit strategy. So down the road, when you want to exit out of the property in 10, 15, 20 years, you're in a place that owner-occupants would want to buy that property from you on the retail market. So we work with companies in each of those markets that specialize in that particular niche, and then they're able to also use an economy of scale because they're doing this. They're buying all their construction materials in bulk. They're running their construction crews, their own construction crews. They're doing all these things at scale. And so you can benefit from working with professional companies that have that economy of scale. And then, as you said, also that property being leased out to a qualified tenant after it's renovated so that you, as the real estate investor, can come in and evaluate a performing property. Now, that's really important because that helps you mitigate your risk dramatically, okay? You're not speculating on, I wonder how much this would rent for. I think it would probably rent for this much. No, you're evaluating a lease that's already signed by the tenants that's living in the properties. You can see this is how much it is already rented for. You verify your property taxes, verify your insurance, you verify everything. And then you, of course, do your home inspection, do your appraisal. You independently verify that all the renovations were done properly and the property's worth what you're paying for it and the tenant's paying the rent that you expect and all of that. And then by doing that, you close on a performing property and you cash flow from day one and you leapfrog over all that upfront risk of renovating distressed properties and how long might it take to do that, and what if it goes over budget, and what if it takes longer to rent it to a tenant and have more vacancy up front than expected, and what if the tenant doesn't pay what I expect, and all of these risk variables. When you buy turnkey rental property, you just leapfrog over them, you evaluate the deal, you conduct your due diligence on the deal, right, which you all do with independent professionals that work for you, and then you close on a performing property.
So the lesson here too is where I've seen a lot of people make mistakes is, and you hit on it right in the beginning, is there was a lot of folks promising, oh, well, this neighborhood is up and coming, and then purchasing there with the anticipation that it's going to change over and be nice. But at the meantime, at that specific point in time, is you're buying in a war zone, basically, to say it nicely. And that's where a lot of people, that's what went wrong for a lot of people. So what Matt's trying to say is there's a sweet spot. It's already an established neighborhood where people already want to live. There's tenants that have already signed leases. So there's no speculation of, what's the market rental rate? No, you know what it is because you've seen a contract for it. So it's a great way for folks that don't want to do everything themselves, right? A good done for you model, this turnkey real estate model.
Yeah, and I'll give you guys a great due diligence hack just in terms of what you're saying, MC, with that risk vector there, is to reach out. Now, these are all in major cities, and that means that there are tons of property management companies that work in these cities. If you just Google property management and put the name of the city, you'll come up with a whole list of them. You can just dial up one of the property management companies that comes up in your Google search and say, hey, I'm considering to buy this property at this address, right? And I'm interviewing property management companies to decide who I want to manage the property for me as a rental. Tell me what you think about this neighborhood. Is it a high demand rental neighborhood? How long would it take you to rent this type of property there? How much do you think you could rent it for if it were to go vacant? And you can just totally independently verify all this stuff, because if you're calling up just random property management companies, they have no incentive about whether or not you buy that property or you don't. They're not involved with selling you that property. They'll just tell you honestly about, or you can do this. If you're deciding between 2 or 3 properties, which one you want to buy, you just call up a property management company, say, hey, I'm deciding between these 3. Which one would you be most excited about managing? If I was to hire you to manage this, which do you think would rent the quickest and have the highest rental demand? And also, if I were to resell it, which would be in a neighborhood that an owner occupant would most want to buy and live in? And you can literally just ask those questions to completely independent property management companies. And they do this all day, every day in that city, in the trenches. So they'll give you that independent information, and you can verify everything completely independently in that way before you buy.
Yeah. All those Midwest towns that you mentioned too, it's interesting. They're all still great places to raise families, especially in the suburbs. So it's interesting. What do you see, Matt, in the next, I would say 12 to 18 months? It's hard to see 6 months ahead these times. But what do you see happening in the real estate space? Maybe your take on interest rates, where you think they're going, and then the housing shortages that are everywhere. Where do you see this? And again, 12 to 18 months from now.
Well, interest rates have just hit their lowest rate that they've been in the last year. So that's all positive. One of the things to remember about interest rates as a real estate investor that's amazing is that you are in the driver's seat. Okay. So if you lock in your 30-year fixed rate mortgage today, okay, and you make your money when you buy, I'm going to keep saying that. Okay. Find a deal where you add in today's mortgage rate, what that mortgage payment would be, your taxes, your insurance, your property management fee, all that, and make sure it's positively cash flowing, okay? When you close on that deal, you are making your money when you buy because you're buying a profitable investment, cash flows from day one, and then you're just going to let those 5 profit centers work for you. Now, if interest rates, let's just say they happen to go up. If interest rates were to go up, the bank cannot raise your interest rate because you locked in a 30-year fixed rate mortgage. However, if interest rates were to go down, as most people think that they are going to head down, I don't expect them to go down to what they were 4 years ago. That was the lowest rate they've ever been in the history of the United States, and I don't expect them to be that low again in my lifetime. But if they go down further, though, you can refinance your mortgage at the lower interest rate and reduce your expenses and change the terms of your deal in your favor, but the bank cannot do that in their favor, right? So you can buy now, lock in your rate today, make your money when you buy, and benefit from the advantages that I talked about in this higher mortgage rate environment, right? Which is that properties being kept off the market, pushing home prices up, pushing more people into the rental market, pushing rents up, creating higher demand there. All of these are benefits, right? Our clients that have been buying property over the last 5 years have seen incredible appreciation. They've seen incredible rental increases, all of this stuff because in part of that higher mortgage rate environment, right? So you can benefit from the higher mortgage rate environment now, and then when mortgage rates go lower, benefit from that environment by refinancing your mortgage and lowering your expenses. And so I think that, most people think mortgage rates are going to come down a bit more and they're going to continue going down a little bit. But you don't need to speculate on that and you don't need to wait in order to profit from that. Other variables, what else is going on? People are talking about tariffs. Are these tariffs going to be here? Are they going to stay? All that kind of stuff. Well, if they do, what would that create? That would create a situation where home building materials would cost more money. And that cost would get passed on to the people buying those properties. So if you buy now, you are buying at today's prices. They've already been built. They've already been renovated. Those materials have already been put into the houses, right? So now if tariffs comes and those materials for future houses go up and that gets passed on to the buyers, those comparable properties that sell in the future, just like yours, are going to be more expensive, which is going to raise the home price and raise the value, the comparable value of your property, right? What about inflation? Inflation right now, as we're talking, is about 3%, right? Over the last decade, it was on average 1.9% from 2010 to 2020, right? So we're still higher inflation than that. Some people are speculating, is it going to go up? Is it going to go down? Well, guess what? You profit from inflation when you buy and hold rental property. So when you do that, you're positioning yourself to benefit regardless of what happens. Are tariffs going to happen? Are they not? Is inflation going to go up? Is it not? Are mortgage rates going to go down? Are they not? Whichever of those things happen, you're still going to be able to profit and benefit when you buy and hold for the long-term residential investment property.
Yeah, it's not speculative. It's a long-term strategy. I got that, and I love that too. I have the same philosophy. I love real estate and, of course, the life insurance, two asset classes, because they're boring. They they just do what they're supposed to do if done correctly over a long extended period. Talk to me a little bit about the business aspect, right? So you've built a business which you can operate from anywhere in the world virtually, which is, of course, that was your intention. You were very intentional of building it, just based on from our previous discussions you and I have had. Speak to our listeners and viewers a little bit about that, of building a business with intention. And now, I mean, it frees you up. You could go wherever you want and work from wherever you want.
Yeah, it was really interesting. In 2007, when I was founding this business, a brand new book came out in the bookstore that year called The 4-Hour Workweek by Timothy Ferriss. And I bought that book and I read that book the day it came out. And one of that light bulbs that went on when I read that book is that you can build a location independent business where you yourself don't have to be physically, geographically restricted and going into an office every day. And you can run that business from different places around the country, around the world, wherever you want to run that business from. And I was like, that's really interesting. Let me think, could I apply that to real estate? And then as I started thinking about it, so on the one hand, it was like, okay, we want ourselves and we want our staff to be able to be location independent and to live in different places and to work from, to work from wherever they want to, wherever they need to, for their families or whatever it is. So there's that benefit. But the other thing is that it also benefits our clients because we are not just in one market, right? There's a lot of companies where they only sell one market, and they're going to tell you that their market's the best market, no matter if it really is or not, right? Like a lot of those markets that we were in back in 08, 09, 2010, that were actually the best markets, then those are no longer the best markets. But the people that are just in those markets, right? They're local people that only do that market. They got to find a way to retrofit the market materials and continue to convince people to buy in those markets, even though they're not the best ones anymore, right? So we said, this model would actually allow us to operate and help our clients buy in the best markets, regardless of, how they change over time. And it allows us to be market agnostic. We don't care which market you end up buying in, right? We're a real estate brokerage. We make the same amount of money no matter where you buy. Like
Right.
it doesn't matter to us. We're not trying to convince you to buy somewhere. We just want to facilitate your ability to buy in the best markets as those markets change over time. And so by building our location independent business, it allowed us actually to get our clients access to all these different markets and to enable them to buy in those different markets. And so, yeah, we've been able to operate that business. My business partners and I founded it with two business partners. We've never lived in the same city since the company was started. As you know, I have spent time all over the world, in your home country of South Africa and other places, and it's been great. It's been really, really cool, and I've been able to meet real estate investors, in all different places as I'm traveling around and speak at different events about how to buy and hold residential investment property in the U.S. And you can do this from literally anywhere in the world.
Tell me a little bit about your experiences, because you had a good little a plan, right, that you mapped out of staying a certain amount of time in certain areas around the world. Tell us a little bit about that. I thought that would be very interesting too.
So it was interesting because when I first started the business, I was based in Los Angeles, and we weren't doing any real estate there. We had a lot of clients there. There's a lot of buyers in California, but it doesn't make sense to buy real estate in California because it can't get to cash flow, right? So a lot of California buyers buying in the Midwest or places like that. And so I was in a relationship at the time, and my relationship partner was doing her PhD at the UCLA in Egyptian history. And so one day she comes home and she's like, yeah, so I got to go to Cairo for a year to do my dissertation research. And I was like, I'm location independent. Sure, let's go to Cairo for a year. So I'm like, am I going to be able to run this business from Egypt? Like, I'm running it from LA, and we don't have any real estate in LA, so clearly it's all remote, what I'm doing anyways. But would it be different if I did it from like another continent, another time zone? Like, how would that work? But sure enough, we moved to Egypt, and everything was completely smooth. And then we were like, wow, why don't we, after that, we're just like, well, we don't need to go back to LA. Why don't we just take a year and, pick the top 5 places in the world we most want to live, and just go rent an Airbnb for like 2 months in each place. So we were like Rio de Janeiro, Cape Town, South Africa. That was the first time I went to Cape Town, and Barcelona and Lisbon. And, so we just started going around the world. And then you realize, whoa, like I could really just design whatever type of lifestyle I wanted to design, if it's a lifestyle of itinerant world travel, or if it's staying in a particular place for a particular reason, or if I want to spend more time with my family, at the holidays, or spend more time with my parents, or whatever it may be, I can just make those choices to do that. And so it's been great, but it's also been great because our staff has been empowered to do the same thing, right? Like they're based wherever they want. Some of them are digital nomads. Some of them are based in wherever they need to be for their family. And, they're doing that. And then our clients obviously live all over the U.S. and all over the world, and then we're able to help them to buy in the U.S. real estate markets, and we're able to, change real estate markets over time as that becomes more advantageous. So it's really, the whole model has, it's worked out well.
That's awesome. We talk a lot about business, cash flow, investing on the show. We also talk a lot about legacy. So I always ask my first-time guest, if you cannot leave any money for future generations, but you're only allowed to pass on 3 principles to them, principles or values, to help them achieve success and happiness, what would they be?
First is that the value of your time freedom and your location, well, maybe these are two different ones, right? The time freedom and location freedom as two values are for me more valuable than the money, right? Like, because there's a lot of people that just work so hard and they make a bunch of money and they're like, quote unquote successful in business on paper because they had this financial success. But how much time did those people spend doing that? And what did they sacrifice in terms of their lifestyle in order to do that, right? And so for me, the location independence, the freedom of mobility, for one, has been unbelievable. I've been able to see the world and spend extended time in cultures, and places and countries from South America to Europe to Asia to Africa, all over the world. And that's been unbelievably enriching. So when I think about like what would an enriching life be, part of it has to do with location independence, so I can go and spend time in those places. And then part of it has to do with creating control of your time and creating, so that would be number two, I think, would be creating your business to be as asynchronous as possible and to give you as much control of your time and allow you to recapture your time. So when you start building and scaling your business, of course, you'll be hiring people and outsourcing things and so forth. And then that allows you to make your time as asynchronous and flexible as possible, which allows you to design your lifestyle. So if I'm in Cape Town and I want to go out to Stellenbosch on a Wednesday afternoon and I want to drink Pinotage while looking at the wine vineyards, I have the flexibility to do that, right? And so that's amazing because most people can't even imagine doing that, right? But if you build the business in a particular way, you can build in your time freedom and you can build in your location freedom. And so I would say those would be probably two of the biggest lessons that I've had. And then I guess the third one, is just the people that you surround yourself with. And so, as I'm building these relationships and I'm traveling around, I'm just meeting incredible people, right? Because as you start doing things that are aligned with your values, right, you start meeting other people that have similar values and that are doing similar things. And now all of a sudden you can surround yourself with them, because a lot of times entrepreneurship can be very isolating, right?
Yeah.
Like you might be the only one that when you start, that's like, oh, I'm going to try to start my own business. Maybe I don't know anyone that's starting a business. Or maybe I do, but they're all doing very traditional types of businesses, and I want to do this location independent business, or I have this aspiration to travel the world and be a digital nomad and do this stuff, and I don't know anyone who's doing that. So I think the third one would be finding the people and surrounding yourself with the people that are doing what you want to do and have the same values as you do. Because that's amazingly enriching, and it's also supportive because, as you know, MC, entrepreneurship has a bit of a roller coaster to it. It goes up and it goes down, and man, especially when it's going down, you want to be surrounded by other people that get it, they understand it, they can support you. And so I would say the people, that would be number three.
Awesome. Matt, where can my listeners and my viewers learn more about you? Sign up for your list to just stay informed of all of the projects and all of the many things that you're involved with.
Absolutely. So we have a special link for you all. If you go to maverickinvestorgroup.com/CFN, stands for Cashflow Ninja. So maverickinvestorgroup.com/CFN. There you're going to find a few things. So first of all, I want to invite each of you to a video consultation with Maverick. One of the things we like to do is work directly one-on-one with all of our clients. It's completely free to work with us, by the way, just to be super clear about that up front. We are a real estate brokerage, and what that means is our profit model and our business model is that on closed real estate transactions, we get paid a referral fee, which is like a commission, and it's paid by the seller, never by the buyer, which means that 100% of our services are completely free for you. If we cannot help you find rental property that's the right fit for your criteria and all that, we get paid no money at all. Okay. And we set it up like that so that it would put the onus on us to deliver value. If we don't deliver value, we make no money. Okay. So you don't ever have to pay to work with us. This is totally free. So I want to invite everyone to do a free video consultation. We'll get to know you, understand your real estate investing goals, your buying criteria, where you are now, where you'd like to be. And then we can work with you on a customized plan to help you start or continue building your real estate investing portfolio in the way that's right for you, in the markets that are right for you, and answer all of your questions and introduce you if you need to connect with preferred lenders, if you need to start an LLC to hold your properties, if you need a CPA that specializes in this stuff, we can introduce you to all those people as well. Everything starts in the consult, and then if maybe you're not ready for the consult or you want some additional stuff, we also have some free educational webinars that I have hosted and recorded there on a range of real estate investing topics as well. So you can just kind of come into our world. Also on our website, you can actually look at properties. Like if you want to see like, hey, let me see what those property price points are like in Kansas City or Cleveland, and let me see what those itemized financials are and what the cash flow actually looks like. You can actually click through to the different markets. There's actual properties there, itemized financials. There's a cash flow calculator if you want to put in your estimates for appreciation and rental increases and what would happen over time if this happened. Like you can just play around with all that stuff and check it out. All that is on our site. Everything starts with this link, maverickinvestorgroup.com/CFN.
Awesome. Well, thank you so much for coming on the show and sharing your journey and your knowledge and providing so much value to all of my listeners and viewers.
MC, thank you for having me, man. It's been great.
And thank you to all of my listeners and my viewers for, again, spending your most valuable resource, your time, once again with me on the show today. Everything Cashflow Ninja is at cashflowninja.com. We've got over 1,000 podcast episodes. There's 4 books, there's reports, there's webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.